welcome to the Situation Room. The next 80 minutes is going to be peak golden nuggets. We've never done this before. It's going to be a virtual sit down with three of the best in the industry. We've got Lewis Allsopp, Abdullah Alajaji, and Rick Waind. They're all going to be breaking down what's actually happening inside their businesses and across the market right now. Coming up, we're going to be discussing what the data is really saying nearly 8 weeks into the conflict, why transactions haven't stopped, where the real pressure is building, and what's happening behind the scenes in brokerages, from cost cutting to consolidation, and who is potentially at risk. We're going to delve into how buyers are thinking right now, where the opportunities are, and what the smartest players are doing next. Because while most people are waiting for clarity, this room is already positioning for what comes next. Let's get into it. Welcome to the Situation Room, brought to you by Golden Nuggets. I am joined by some heavy hitters in Dubai real estate, starting with Lewis Allsopp, the chairman of the Allsopp and Allsopp Group. We have Rick Waind, who is the CEO of Sencor. And we've got the founder and chairman of Driven Properties, or Driven Group of Companies, Abdullah Alajaji. Welcome to the Situation Room.
Thanks for having us. Thank you. Were you expecting some sort of like some flags or something?
Little drum roll, bit of excitement. But yeah, ultimately, look, I say the Situation Room. It is, we're not trying to take the piss out of the situation, but this is us trying to find out what's actually going on the ground. You guys are so well placed to tell us what's going on. I think this episode is going to be super useful for anyone in the real estate industry, whether you're an agent, a brokerage owner, a landlord, a tenant, or a buyer or a seller. So there's lots to get through. I'm blessed to have all three of you available at the same time today. So we're going to get straight into it. And first, I want to start with your vantage points. We're nearly 8 weeks into the conflict. What story is the data telling you? Who wants to kick off?
I'd say what's really changed is pace, not direction overall. So we've seen resilience from sellers. They're not liquidating assets. Decision cycles are certainly a lot longer. Clients asking more questions. Some buyers want clear geopolitical visibility before making any commitment. If we look at the Q1 data, it still showed that Dubai is attracting capital, recording transaction growth overall. Not only on the property side, but on the institutional side, we've also seen some headline news on Blackstone making commitments, deploying capital, and so on. That tells me at least that conviction has not really vanished. It's become a bit more selective in this environment. That's how we're seeing it.
Well, I mean, from our side, look, it's been quite a long 8 weeks for everybody, right? And throughout those 8 weeks, we've not only had the situation geopolitically, we've had floods, we've had Eid, we've had homeschooling. So all of these things in isolation would have had an impact into the market, and it obviously has. In the first couple of weeks, there's certainly 3 or 4 days where the market pretty much came to a standstill. And for us, transaction volumes, I'm sure we'll speak about prices a little bit later, but transaction volumes really dropped to a trickle, sort of 10, 15% of where they were prior. And most of those were deals that were carried forward. I think I would say over the last sort of 10 days, we're starting to see a little bit more of a positive movement. Actually, the first week of April, funny enough, was probably the slowest. The last week and a half, we've started to see transactions increase. Certainly not where they were, but more around sort of 70% of prior to on transaction numbers, not on value. But what we're seeing moving now, and I'd be really interested to see what the two lads are saying, it's kind of smaller ticket stuff. So there's more deals happening in the market, not some of the bigger deals that we all like to see, because I think, frankly, a lot of those buyers just, for a large part of them, just aren't in town at the moment. And I think when they return very soon, God willing, I think that will come back. And I think to add to Abdullah's point, my last point is, whilst of course there are people taking a wait and see approach at the moment, nearly every person I speak to, if they have a little bit of a war chest, they're pulling together their war chest and they're thinking about when is the right time for them to pull the trigger. So the underlying demand for people to live here and own here, I think, is very strong. There's just a lot of it sort of sitting on the sidelines at the moment, waiting to see when the right time to move is.
Lewis, over to you. You published something recently, didn't you, in Arabian Business?
I am. I'm a big
Read
friend
that.
of the Arabian Business in the press. I make sure I annoy the negative people because I think they just think I publish lies as well. Lewis just makes stuff up and there's no way they're doing sales. Just on Rick's point, really, about no big sales happening off camera. I know Driven did a very big transaction. I'm not going to announce what it is yet, but it was a substantial one. And I'm very jealous. It's not me doing that, but well done to Driven. It just shows that there is a market there. But just touching on Rick's point, all our numbers are green shoots. We're nowhere near where we want to be as in previous. I mean, the reality is we were in the boom economy. I think in a single month in February, I broke every single record, transactions, sales, volumes, everything you could imagine. So to pull the brakes on so quickly, obviously, is a shock to a lot of businesses. But, we're doing deals. We just sold a house in the Meadows yesterday for 15 million dirhams. We just won in DIFC 2 days ago for 8 million. Loads of marina, downtown stuff is moving, 1.8, 2.5 million, and they're going 10, 15, sometimes 20% below what the last transaction price was. I think what you're finding is that sellers, there's two types of sellers. People with liquidity and no pressure, they're just not moving. So I sit in that category. I have money, I have assets, I'm under no pressure, I'm going to complete my payment plans. There are people that have lost their jobs, their dividends, they've got payment plans called overstretched, and they have to make moves. And then moves that they're going to make are on ready assets. And the only way any buyer is taking that risk is mitigating the discount, which whilst the ceasefire is currently not fully in place and everything's going on, I think 10 to 20% will get you a transaction. The most important thing to anybody watching, if you're an agent or an owner, transactions are happening. I set a document yesterday for Property Finder. They have the API for the new sales in Dubai, the formats, not the contracts. And basically, it's just started to go like this now. So our viewing numbers, stats for anybody, we're 2% up on viewing numbers pre-conflict. So we normally do 2,000, about 2,000 viewings a week. We've just touched over 2 for the 7-day rolling period. So if the viewings are there, it means we've got petrol in the car to get the car moving. So I look at the fundamentals. Deals are not what they want to be, but everything is trending in the direction I need to see, which is good for the market.
And if you think back to week one of the conflict, what was your expectation on how long this would play out versus what are you thinking now?
I think everyone, I thought this would be a 10-day thing. I thought we were talking about a conflict, but look, the honest situation.
Abdullah's shaking his head.
Yeah,
nodding his head.
I thought, 10 days, I'm a very positive guy. And I remember on probably week one, I was on the roof of my house. And as I've looked over, the interceptor's gone over my house. And I'm like, oh, wow, like this is not like anything I've ever experienced before. And we're all business owners, we're all shareholders in businesses. And, no one's been through a situation where, you're selling real estate and your city that you're selling is under siege. And they did that with it amazing. But yeah, I thought 10 days it'd be over. It isn't going to be a 10-day thing, but people still want to buy and are still moving here. So I have confidence. But yeah, 10 days. Don't know about what you guys thought.
I don't know how, but nobody knows. Frankly, that's the reality of it at the moment. Nobody thought it'd perhaps be coming on 2 months, but we are where we are. But I think it's remarkable how quickly people get used to a situation. The schools are now back. The roads, the traffic's not quite what it was prior. It's still pretty busy. Restaurants are busy. Shops are busy. So how long the acute period of the conflict will go on with the Strait, etc., nobody knows. I'm hoping it's going to be fairly short, as everybody is. But I think whatever happens over the next few weeks, the way that the government has responded to it and made everyone feel pretty safe here despite what's happening, and secondly, how quickly people actually just get on with their lives, that's probably been the biggest eye-opener for me. Because I agree with Lewis, first time for everything, right? The first time in everybody's life. And here we are 7-8 weeks later, life's going on as normal.
Do you know one notable thing, Rick? One notable thing as a human and a business owner ourselves is, I think this is not talked about enough. We are obviously from England, and I love England. I'm patriotic. My second blood is the UAE. I feel half Emirati. That's just how I feel. But the UAE is spending $6 billion to defend their country, not asking for any income tax. Nothing's been said about it. But you just know, you see the rulers, and they're just like, we protect our citizens, and everything they've done, how they've over communicated to everybody what's happening, even down to what's going on in the daily basis. I've sort of took that into my own business, and I'm over communicating because I think it gives a sense of calm to people that this is what we're doing, this is why we're doing it. I think the UAE is going to come out of this stronger than any situation that could come out of a negative term.
And who knew we had such a defense system? I had no idea.
But as a society needs stories to tell each other, right? Societies need historical events that you've all lived through to strengthen the bonds within society. We talk about the Blitz spirit and things in the UK. I agree with you. I think going forward, the society of the UAE, both locals and expats who've lived through this, will have a greater affinity to the country. I agree with that.
And there have been, I'd say, lots of comparisons, especially across social media, people saying, oh, we made it through the floods, we're going to come back, we made it through COVID. There's been a lot of comparisons, in particular to COVID or the global financial crisis. In my eyes, I'm thinking, can't compare it to any of these. This is like the closest we can compare this to, and without being alarmist, is World War II. And that was way before our time, So do you see any parallels between the current situation and COVID or the global financial crash? Or are we just forcing a narrative onto something that's fundamentally, totally different?
I think COVID was a global demand freeze. Everything really stopped and it simultaneously stopped. And the global financial crisis was more of a credit crisis. What we're seeing now is regional geopolitical disruption, and the mechanism is also very different because it's concentrated, it's in the region. What's similar is this: in each of those prior moments, the Dubai property market really recovered faster than anyone expected and any analyst predicted. So that pattern really matters, and not because history repeats itself, but because it reveals something structural about Dubai and the regulators and how fast they act and how agile and dynamic they are, the depth of that regulator, the quality of the government response, and so on. So this is how we're seeing it from our perspective.
I think the UK and the US and the world, specifically Europe, they're very quick to sensationalize, the depth of the problem. I'm very aware of what's happened around the world, but you could go anywhere. I spoke off camera, unfortunately, about that lady passing away in the Westminster, was run over in London. That happened in the UAE today. It'll be all over the Daily Mail. It'll be everywhere. No one's quick enough to talk about and use Dubai. And I just said a minute ago an example of the $6 billion spent to protect. My father-in-law is an ex-Marine for the United Kingdom. He has fought for the country, and he told me the UK could not defend itself for more than 48 hours. 48 hours based on what happened in the UAE. So if you can't tell me that the UAE is currently one of the safest places to live, it should add ultra confidence to anybody even thinking about living or living here.
So as far as you're all concerned, the fundamentals remain.
I think if we're comparing COVID to now, the obvious similarities are it was an immediate shock that no one was expecting a month before, right? That's absolutely the case in this case. From a market positioning point of view, we're in a very different position now, both positively and negatively. Back in COVID times, prices were very, very low. We were selling properties at below replacement value. There wasn't a huge amount of stock coming to the market. Whereas today, prices are pretty high, or higher certainly, and we've quite a lot of stock coming to the market. The flip side, though, we've got a far more diverse, sticky economy and strong resident base than even we had 6 years ago in terms of end users and people staying there. But you asked about comparison. The one thing that was quite interesting, I actually had breakfast with Linda Mahoney last week. Linda started Better Homes in 1986, and she was giving me the comparison of first Gulf War. And that's something worth looking at, right? And the rebound of the economy and GDP growth here in region in Dubai post first Gulf War is probably something to look at, which is very, very strong. And that's what I think will happen again. I think after this, we've shown that there's a lot of resilience in people staying here. Of course, people are going to have to rebuild some confidence to return. But in terms of the government reaction to this, I think will be very, very strong. And I think there will be a raft of initiatives coming out to attract both investment and people and tourists, etc., over the next couple of years. So I actually think the next couple of years could be really exciting here. Really, really exciting.
We're going to get your wish list later on, or what those initiatives should be. Abdullah, do you want to add to that?
Yeah, I mean, look, from a regulator's perspective, they're doing a lot of things, and we know that they're already thinking of the day after. And I think these are things that investors really want to hear, and new residents, new visitors like to know what the regulator have in mind for the day after, and what we've been hearing from government officials. Whether it's out in the public or behind closed doors, is that the initiatives will come. It's just going to happen. Everything's going to be the day after.
And as leaders, of course, difficult decisions need to or tend to be made very early on. Are you comfortable sharing any of the decisions, changes, or pivots that you've had to make to protect your business?
I mean, from our perspective, we're very fortunate. We have a very strong CFO who's Harvard educated with Amazon and Wall Street experience, which means, we already have the right controls in place. Our focus is always on running smarter. We're improving efficiency through automation, better systems, and better technology, keeping the business really responsive to what the market needs. So if the market size is smaller, as long as the business can in an agile way adjust to a size that can cater to a smaller market, then that's what's going to happen, and that's what we have to do or know how to do very, very quickly. And of course, any corporation of these sizes will probably do the same.
I just echo what Abdullah said. I think if you were sitting in the category of a Driven, a Better Homes, and Allsopp, there's probably about 6 companies in the whole of Dubai that I think sit at our category. We call this a situation room, but I have my own situation room in my office, and it's my CFO. And what they're very good at is what Abdullah said. They will tell you, what does your forecast look like for 4 months? What's your cash flow look like? What decisions do you need to make around marketing, around sales, about staffing? The reality is, if you're a really good business, you're quick to make decisions. You're quick to look at your forecasts and make your revenue match your forecast. The reality is, in any situation, whether it's Apple, Google, they look at their forecasts and make decisions on either increasing the revenue. If they can't do that, they remove and move around their costs. Whether that is deferring payments to third parties to bring yourself to a state of break even, or mitigating potential losses in profits. Every really big company will be organized. And I think Better Homes, Driven, and Allsopp have been through 2008, 2014, 2020. This for us is just another day, and we're just mitigating and managing the situation we're in.
I'd love to know if there's something that your CFOs have come to you and said, we've got to get rid of this, or we've got to stop doing this, that you've pushed back on and said, no, 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 no. Is there anything that from the CFO's perspective, you've said
Always.
no?
Always. The CFO, the first thing they want to cut is marketing. It's the first thing they want to cut because it's the biggest expense. Now, I'm an agent. I've been an agent since I was 16. I'm 40 years old now. I know the fundamental thing you never cut in is your marketing and your key staff. Things that you can lose are like 5 drivers. So these are things that we looked at. I was like, everything we do is digital contract. Why do I have 5 drivers? And then when you start to dig into it, you're paying for 5 cars and 5 petrols. You're like, wow. And then you start going, oh, I actually have 4 cafeteria guys. Why have I got 4 cafeteria guys? And then you start to dig deeper. And then I found that I had a warehouse in Wassel that I don't use. It's empty. It's for sale boards. So it's actually been a really good exercise. And I'll be honest with anybody watching this, we've been a bloated business. When things are really good, I will have a head of and a super head of, and we will grow. But when things need to trim back down, we look at what we don't need. But the one thing the CFO will never see is they don't understand what marketing is. And our job is to protect leads, revenue, income, listings. If we protect them fundamental things, the business will maintain the same.
Well, let's talk about that, because I think for many companies, it always starts with the portals as the main, well, it is the biggest or the largest fixed expense of any brokerage. And in a tighter market, it is harder to justify that spend. Do you see that model being challenged? Are you making cuts on your portal spend? What's happening? And I think there's a big push as well for some of the portals pushing for exclusivity, perhaps giving more perks for exclusivity. How's this likely to play out?
Yeah, I mean, look, we've all three of us, I know, have been having lots of conversations with the portals. We've just entered into one new contract with one of them. It was a renewal, so it wasn't a new contract, and we haven't reduced what we were spending because, you know, as Abdullah and Lewis said, we've got to back this market, back our brokers, continue to invest in that area. I've got to say, you know, the portals are sort of, they rise and fall our fortunes. And this time round, they've been pretty quick to try and come out with some packages to support brokerages, which is welcome. You know, they don't have to, and I think that has been the right thing to do. But to your question about the sort of long term, the portals game here in Dubai, in particular, is built on really driving the intercompany competition. So every time they come around, they go, "Oh, Allsopp have done this and Driven have done that, and you need to spend." So every year we invest more, we get a nice little uplift in results, and then for the rest of the year, those results start dropping because everyone else is uplifting throughout the year, right? It'll be interesting to see, while this unique time now, everybody's, you know, getting through and there's some offers on the table. It'd be interesting to see where that competition is in a year's time. If we see some real consolidation in the market, the question then will be, will the agencies have to pay quite so much to get the same result? A bit of an unknown, but you know, I could see that. I could see that. And then, you know, we've not even talked about other ways to generate leads. I'm sure these are the two gentlemen, I know they are, like us, we're all looking at ways to generate our own leads now. And that's becoming a little bit more democratized, I think, certainly in the age of AI and agency marketing, et cetera, et cetera.
How else are you generating leads? Is there anything new?
Tell us the secrets, Rick. Tell us the secrets. What you got for us?
Well, I'm sure, like you guys, we've got a very, very, very big database. We've been around, you know, our database, like the two gentlemen here, is decades old. So we're building tools that reach out and converse and offer. That used to be more sort of programmatic, it's becoming more AI now. That's bringing a lot of business into us. But that's not to take away from the fact that a lot of that data coming in still comes from the portals today. So they are still a very big partner for us. They're still a very important part of the business. But yeah, I could see I don't want to say the hold that portals have had on the market over the last 5 years loosening a little bit over the coming years, but it made it. I'd be interesting to see what Abdullah and Lewis think.
For us, I mean, of course, portals are very important, and you know, the conversations are now centered around, as a portal, what can you know, rather than talking about a subscription that is fixed where we don't know what the size of the market, you know, how can we ensure that these conversations are centered around performance? So performance marketing is a thing. It's been proven. The biggest players are playing it. So this is where these conversations become a little bit tricky with both portals. But like both Rick and Lewis said, the marketing is very essential. We haven't dropped it at any point, or won't. In fact, it's times like this where you try to grab a stronger market share, get a better hold of the market, and ensure you double down on the communities you're trying to tap into. So from our perspective, we, on the technology side, we also build prospecting tools and tools that are very agent friendly. We have an entire growth and innovation team that's really their mandate or their remit is to automate tools to ensure that the agent's job and prospecting and selling and moving is a lot easier. So we double down on these initiatives.
I think the portal game is going to be an interesting one. I think there's going to be a certain amount of bucket of money you can spend if your revenue drops for however long that may be. And I think the big decision Allsopp and Allsopp have, and probably the big companies, is where does that bucket of money get spent? Because if we're spending 100%, honestly, we're probably going to spend 70% in the next coming year to match up with the revenue. But that doesn't mean that we're going to make less money. It just means that we're going to reallocate our money into our own AI, our own tools, and what we're doing. I think a lot of real estate agencies, they don't want to fight anymore with each other. That's the honest truth, because it's a race to the bottom. You know, if I'm fighting against Rick and Abdullah and I get a call saying they're spending more money, you need more premiums. We've done that for 10 years. And the problem is, honestly, Sil, that takes away your margins beyond belief. I think talking about Rick and Abdullah, what they're saying, I think we all face the same problem. We have this massive bucket of leads, and what we're all trying to figure out now is what AI and tools can we do to actually not close 20% of the bucket. How do we close 80% of the bucket? We don't actually need more leads. Also, if I'm honest with you, we had the leaking business. Like it's incredible. You go onto our system and see they're bought through Driven or they're bought through Better Homes, but they're on our system. I've got that job to fix rather than spend more money on the portals, which, click this if you want. We've deployed $1.5 million in the last 30 days into technology. That is that's already in the war, because I believe that if I get my technology right, everything else falls into play, because people are not using it at the moment. Claude, GPT, Gemini, figuring out how to plug that into your infrastructure, the leads that you're generating, what you can do. That's the future of real estate, in my opinion. It's not just spend more to play more. I think that game's sort of finished for us.
Interesting. Okay. Well, let's talk. And Lewis, you touched on it. We've come off the back of multiple record-breaking years. Do you think that has kind of encouraged like complacency, or has it created some sort of discipline in the industry?
Complacency. Even with me, if I'm honest with you, speaking as a real estate agent, owner, investor, I've been very lackadaisical with what I invest in. I'm lucky, so all my investments have gone well. I've hired people where they're probably not worth the money I paid them, but wanted them. And when things are going well, to be honest with you, as a business owner, you just let it ride. You try and build on it, but you make very different decisions when the market is what it is. The crazy thing is, Sil, I can't put it in the press, but we just had our best ever quarter in the history of the company. January to March, our best ever quarter in 18 years. So yeah, you do get complacent, but if I'm honest with you, this excites me. When I know that other companies are struggling and I know that the market is struggling, this is what really gets me going. It's actually boring when things are going well, because now I know that the 3 people in here are about to take the market share from all these companies that opened up in the last 3, 4, 5 years that don't have capital in the bank, assets, they don't own the offices they're in, they don't have money. Trust me, Driven, Better Homes, and also are probably going to come and take a piece of your pie. That excites me. So if the market goes down, I'll just take a bigger piece of the pie.
And likewise, like your top brokers, they're going to be all right. Yeah, they've had some fantastic years. I'm sure they've got a little bit stashed away. But what about the average broker? Like many of them have only known an upmarket. How are they going to survive this?
I think, the two questions are coupled, right? Complacency. There's a lot of brokers who've only been in the market the last 5 years and seen one thing. And I saw 2 videos recently. I saw a video maybe 8 weeks ago, 9 weeks ago, of quite a young broker, quite a well-known broker, made a video about every single one of my investors has made money.
Was that me?
It was him.
Was that me?
You,
a young broker.
A young broker. But it was every single one of my investors made money through me. Yeah, that's because every single investor in Dubai has made money on everything they've bought over the last 5 years. They've all gone one way. And then I saw another video recently of a business owner who, very honestly, it was an honest message. Basically said, "I've only ever worked in an upward market. I don't know what a downward market is, and I'm going to have to learn." I think there's a lot of people. There's an old saying, isn't it? Who's got pants on when the tide goes out. And I think there'll be a lot of brokers who will struggle to adjust. Some will adjust very well. I mean, I've got a broker, John, who only been with us 2 years. I think he sold 4 Maples in the last 5 days. Some of them will adjust incredibly well if they've got talent and they're willing to listen, et cetera, et cetera. But I think some will really struggle. Some will really, really struggle. Some businesses, as Lewis said, have been run in a manner that they've never thought the sun will go behind a cloud. They are hugely over-leveraged, hugely overstretched. Their business models are only viable in a very, very frothy market, and they will undoubtedly find themselves in trouble.
And traditionally, we do in tougher markets, the typical advice is to pivot into leasing, but you don't have that safety net either right now. So where does that leave brokers who would normally rely on that shift?
I would disagree with that. So I don't know what Lewis and Rick are seeing, but we're seeing very good activity and leasing. Our property management department confirmed that. Very few contracts in our portfolio that were not renewed since the conflict started. But we've done a very large number of high value rentals. We're talking 1.8 million plus, 2 of them only in El Primo and downtown. villa in Jumeirah for 1.2. So in fact, we're seeing people who had a purchase decision in mind to push that to a year later, and then instead going ahead and renting. And we're seeing big tickets as well on the rental side.
I agree with Abdullah there, just for your reference. And number one performing agents in that division in the whole company based on listings, viewings, transactions is leasing. It's actually like, because you're getting calls where people are saying, my tenant is up for renewal. I can actually get a bigger villa for the same price. So I'm going to move out and that's what real estate always will be. I've talked about before, your death, divorce, debts. Now we'll have war into it. Then cycles there make transactions move. So if there's an empty villa that's bigger and you get a bigger garden and it's the same price, that will make the market move. So I just stick with Abdullah on that. Our rentals market's doing really well.
Yeah, to add to that, there's two things we're seeing in rentals which are quite buoyant. One is 2-year deals. We've done a number of good 2-year deals recently. Landlords are very open to it at the moment, frankly, with the trajectory and prices, which is great for the broker as well. And, frankly, if we look at the number of brokers that have left during this period, because some have, of course, we always have a bit of churn of brokers, but particularly over this period of time, it's tend to have been younger leasing brokers, often new to town, often with mum and dad on the phone saying, get out of there. So actually the pitch is a lot less crowded now for a leasing broker. So if I was going to start my career in Dubai real estate today, I actually think there's a pretty good message to start in leasing today. I think the activity is pretty good. And as I say, there's a lot of competition. So I wouldn't be afraid of it if I was coming into it now.
And with those 2-year deals, as an example, what kind of percentage drops are you seeing in terms of rent versus February rent?
I mean, on March, we were looking at about 12.5, I think. Our report went out earlier this week. So rent's down about 12.5, but that it is depending on segment. One beds studios have been, hit particularly hard, and I think have got a way to go, frankly. We've had an awful lot of short-term holiday lets in the market. There's a lot of inventory being built in that space. Villas, townhouses are holding up a lot better.
Are we likely to see the comeback of 2 months, 3 months rent-free periods, or are we likely to longer contracts?
Yes, you are, because that's a smart thing for a landlord to do. If you've got a short-term issue around rent prices today, lock in a higher rent value on the Ajari for your future renewals, and yet give some value to the tenant by a 1-2 month rental offer. It makes a lot of sense on both sides. So yeah, we're doing a lot of that.
And you've all got groups, business groups. You also do commercial, holiday homes, leasing, interior design. Are there any parts of the industry that simply aren't working now due to the current cost structures? Is there any segment of the industry that's
I think renovations. I think I don't have a renovations company, but obviously we work with renovation companies, considerable amounts. So the amount of people we've got on our books that have bought expecting that 20% uplift, and basically now going, just getting my money back and we're good to go. And I think that's where, again, the market moves. We talk about that death, divorce, debt situation and war. We're in the same predicament where these people are saying, I need to exit. And there's actually a good opportunity if you're a buyer to say, this is nearly ready. I can get an upgraded house for the same price, 20% below where it was. Renovation and a renovation company, I don't know if anyone's got any legs on that in the room, but it's a big nice.
Well, Lewis, we've got 2 of them.
Good luck with that, my friend. Good luck.
We've got a residential and a commercial, and you're absolutely right. I mean, the order book in the first couple of weeks suddenly looked very, very scary. There are some positive signs since. The commercial guys have pivoted a little bit. We were doing a lot of F&B work, and some of the hotel chains, we're now doing some hotel renovations, which has been really good. So there is still business out there. There is still work out there.
Yeah, lots of hotel renovation opportunities.
Yeah. So that and look, it's like anything in life, right? What you need in any market is movement, transiency, transactions. And the same in renovations. If people are upsizing, downsizing in offices or what have you, there's work to be done. So you're right, it has been challenging, but it's not as bad as I think you've got there. For us, and we stopped doing it about 3 years ago. We closed our holiday rentals about 2.5 years ago. I would have thought that, albeit we're not doing it at the moment, I'd have thought that is an area of an industry that's probably under a lot of pressure.
It's not though, Rick. You know what? You're finding a lot of people that are sitting on the fence about signing up a 12-month lease. Are coming in and doing a 1 or 2 month. I think occupancy at 80, 88, 89% of them. I would have expected it to completely dip, but it goes back to the scenario. We talk about renovations and me saying they're stopping. I didn't think that actually there's 50 hotels that need renovating at the moment. So I just think when there's a crisis, there's always an opportunity in another field, isn't there? And yeah, that's what's happened with holiday. And same thing.
Yeah, we're seeing drops in RevPAR and holiday homes for sure, and occupancy as well. So it is an area that took a hit overall from our perspective. If we compare it, and now more more so than ever before, landlords are moving from that model to long-term rentals, seeing the low occupancy levels and low rates in this environment. Today, hotels are very, very affordable. Even the best of them are becoming a lot more affordable. Of course, this is short-lived, but during that period, people who own holiday homes are not getting their rates, and they're starting to compare it to long-term rents, and we're seeing people shift into that one.
I'm going to have a lot of brokers watching this episode. And they would love to hear from you guys. Like, what would your golden nuggets be? What would your advice be for them navigating the next 90 days?
If you're a real estate broker and you're watching this, you have to work harder than ever and expect to make less money. And if you do that, you will come out the other side with less agents, less competition, everything else. The problem is with a lot of people, so, and this is the honest truth, is that not everyone wants the golden lifestyle, the golden nugget lifestyle, but no one wants the hard work that goes behind it. Like, I've had so many people that I've worked with that hide behind WhatsApps and email blasts and do all these things and don't actually do the real fundamentals of, I'm going to get up early, I'm going to get in it, I'm going to work until I drop, and I'll do it again every day. If you have that mindset, I opened in 2008. That, I'm telling you now, is worse than this. When the whole world collapses around you and you can open a business and still survive, you can coast through this. But it's just whether or not you're too spoilt over a 3 to 5 year period of being real estate. Have you got it in your locker to carry on going? And that's a question you can only answer yourself as a business and as an agent. So I think my fundamental message is work hard, expect less, and the long-term gains are going to be worthwhile.
Yeah, I completely agree with Lewis. We do, in times like this, we call for what we call a revenue sprint. With a natural drop in revenue, and we call on sales managers and start sharing ideas. And one of the things that one of the low hanging fruits is we have quite a good number of brokers that don't get out of bed if it's less than a 15-20 million dirham deal. In this environment, bringing them back to planet Earth, and telling them, what, 5 million deals are
yourself.
5 million dirham deals are go a very, very long way for yourself and for the firm. So get out, let's focus on that. That was something that that low hanging fruit that we looked at. Certainly it's much more difficult for brokers today to get deals done, both on getting the sellers' expectations down and ensuring that buyers actually push on an uncertain environment. But there are several opportunities for both brokers and firms as well to innovate, integrate, consolidate, to ensure that more of a certain market or a certain community is captured.
So if we're at 33,000 brokers now, and I don't know, it's like 10,000 brokerages, are you expecting some sort of consolidation or correction in those numbers? And what levels are we looking at?
There will be consolidation for sure. There will be I would say a sharp drop in the number of brokerages and brokers. It's no secret that this number went from 1,000 brokerages 2020 to 10,000. So it's increase in 5 years in the number of brokerages, and it is those that where Rick and Lewis were talking about complacency. It is those guys that were basically taking everything for granted, we're much less disciplined and managing a corporation or a business that will need to consolidate, that will need to look for options and so on. And believe it or not, a lot of the principles of some of these smaller organizations, their part of their strategy was reinvesting free cash flow of the business in more profit or more real estate. And when it's very difficult to generate liquidity off of your asset base to run your business, then it becomes much more difficult for you, and then you'd have to seek options and seek consolidation.
A lot of these companies, just what Abdullah said, sorry Abdullah, just jumping in, it's a bit delayed, but one of the big things, Silver, if you're watching this in real estate brokerage, is there's a lot of companies in the last 5 years that have opened up for revenue over profit. So they run a business for ego of, I'm going to put it on Instagram that I've got this amount of agents and we do these deals, but they make no money. And then they're hiring people for the last 5 years at crazy percentages, knowing they're not making no money. And what we're going to start to see, honestly, I know it's just going to unravel. Let it unravel in the next 3 to 6 months. You cannot operate a business without profitability. And a lot of these companies are relying on their founders to bring business in and collect brokers, offering them not a lot along the way. So I think that's where the biggest unraveling is going to be. And I think we'll lose 33 to 50% of brokers, because a lot of the brokers we're talking about, they're not actually real estate agents anyway. They've got friends in real estate. They sell houses on the side. They turn up to a launch. That's not a estate agency. Real estate for me is going to visit a home and sell a home, or advice on investment on what their yields are. People have been collecting deals and just doing deals, being a broker. But I think then times are going to come quite sharp to an end. And the people that own businesses operating with no profit, you'll see very soon how that would play out. And I don't think it'll play out in a nice way for everyone that's operating now.
So are you seeing this as an opportunity to expand your own businesses, hire these top agents from other brokers, or?
It's already happening. I've already got 3 people from smaller companies that are saying, I need to get on Noah's Ark. And Noah's Ark is one of these 3 companies here. The people that are safe. People are looking for, at the moment, if you are a business and you've lost your founder, and that's just happened in one of the companies, they've just lost their founder, and they go, wow, my pipeline is in this business. Actually, these guys know what they're doing. And I've seen this every single time, is sometimes when the market's bad, they don't look for the best commission. They look for the most stability with the best people around them. And that's when the big local companies come good. And this is where you see these other companies. It only takes, I think, I'm not going to name the companies, but there's an off-plan company about a year ago that basically started paying post-dated checks because they didn't have the cash flow. That business, I think, is gone now because the signs are there. Then the brokers leave and then they're left with nothing. And I think that's what's fundamentally going to happen. People will see the signs, the founder will leave, there'll be delay in payments, something will give, and then it will start to unravel. So yes, I think there will be damage along the way, which will benefit all the companies that are structurally set up correctly.
I think, we cast our minds back to sort of 2017, before the market started upticking after COVID. When the market was challenging, right? There was a number of businesses then that went bust. A number of big businesses went bust. We at the time acquired a couple, acquired and closed a few, and then took on Ascot & Co. And I use that as an example because I think there's a lot of very good brokers who set up real estate companies who don't really understand how to run a business. Frankly, some of the guys running businesses, I put myself in it, I probably wouldn't be the world's best broker anymore. But, there's brokers who run businesses, don't always run great businesses or very well managed businesses, frankly. And some of those business owners, particularly now with 100% ownership, have a huge amount of personal liability under their name, and they don't actually realize the position they are potentially in, with big, expensive office costs, with huge liabilities around the portals, with expecting, they spend all the money, there's money coming in, but they've got to pay the brokers. And what I think very sadly is likely to happen is, as Lewis alludes to, there's going to be a lot of brokers out there that suddenly won't get paid, potentially over this next period of time. And there are going to be some very good people who own businesses today that find themselves under a lot of personal debt and personal liability. And some of them would be wise actually to start reaching out. Some of them would be wise to start looking for opportunity to come together with a bigger group potentially.
Lewis is like, call me.
There you go. And I mean that not out of a position of trying to be opportunistic. I mean that from a position that we went through this, and some very good friends of mine that in this market went through it, and they're on that side of the fence, and we were able to work with them through bad periods in the past, and actually they've come through it very well personally. So I think it's not some people out there today that might be not sleeping very well, not because of what's happening in the sky, but what's happening on their cash flow. They should be thinking, actually, don't let this go on for months and months and months before it's too late. They should be thinking about what is actually the best thing for me, what's the best thing for my business over this next period of time.
So Sencorp open to acquiring businesses.
Always open to conversations, Silvia.
Sorry?
I said we're always open to conversation.
And Abdullah, one of my latest episodes was about your latest venture, Liberate. Can you tell us how that fits into this?
I was actually just gonna add that the number of conversations. I don't know if you spoke to JP since your episode, but the number of conversations he's been having on
as a result of the episode, no doubt.
Okay, let's just say that as a result of the episode on the, let's call it PCP instead of PWP, pivot, has probably 10x'd, right? He's been having a conversation with a number of small brokerages that are community focused and are finding themselves in this trap where they have expensive offices, a large headcount, and it's a relatively expensive operation and cost related to portals and so on. And these conversations have already turned into another, if we either call them acquisitions or onboardings of brokerages into the Liberate ecosystem. But these conversations have expanded and they're happening at scale at the moment as a result of what's happening, for sure.
And I think it's welcome in the market. Nice consolidation, correction, a bit more professionalism. I'm quite happy for that, I think. Don't want to see anybody lose their business, but I definitely think a cleanup of brokers won't go amiss.
Yeah, I think it's gone up 13x in like 3 years. It couldn't go on. Even prices couldn't continue to go up. I mean, it's nice that when they do, and I'm a business owner and a homeowner, but you need to, the correction is not a bad thing. Even if it stays at 20% as an example, it gets people on the ladder again and it creates transactions. So businesses closing, consolidating, prices, all it does is create movement, and I'm happy with it.
So I want to spend maybe a couple of minutes just talking about opportunities right now. Who's buying? What do they understand that perhaps others don't? Lewis, I think you're in a good position because you've always been quite a strong secondary brokerage, which I think is probably better than being an off-plan brokerage right now. But what are you seeing? Where are the real opportunities sitting right now?
Everywhere that you look, there is opportunity. I think everyone will buy still that was maybe buying 6 months ago, but no one's buying without a deal. That's a simple fact. I think that when you're an agent or you are, speaking to somebody, the qualification questions go along the lines of, your kids still go to school here? Do you feel safe here? Is your plan still to be here in 5 years? If you can sort of answer all them questions, then the fundamental thing is, okay, look, how do we get you from renting to buying? And can you mitigate the risk of the current situation? Because honestly, this opportunity only lasts for so long, whether it's 2 weeks, 4 weeks, 6 weeks, because this will be forgotten about soon. The problem that you find, Sylv, and this is just how the world works. Everyone's always said to me, I'm going to wait for the market to drop 20%, I'm going to buy. Now the market's dropped 20%. You're not buying still. Then that's just the way it is. There are people that
they think it's going to go to 30 or 40%. Could it?
Yeah, it could, of course, but you could get hit by a car tomorrow. Like everyone's waiting for that moment. That moment arrives. Good people, good investors, they know when to strike. I bought properties in lockdown in 2008. I bought it in 2014. I've always bought when people fear, and that's the Warren Buffett famous quote. I know right now is a good time to buy. I know that the buyer is going to continue on a trajectory over the next 5 years. I know all this, but a regular person needs convincing, and not everyone can be convinced, because the real life scenario is not everyone is a risk taker, and that's fine. That's why some people own businesses, some people don't. The best risk I ever took in my life was talking to my wife in a nightclub, and it's the best thing I ever did that turned into kids. That was a risk. And I think some people are not willing to do that. That's just and then you'll end up a sad, lonely man living on the couch with no kids. And that was the risk that you took. So I think going back to what is opportunities, yes. Are there houses for sale? Yes. Are sellers taking discounts? Yes. But probably for 4 to 6 weeks maximum. And then we're back to normality. That'd be my genuine opinion.
And Abdullah, your driven strength has always been in exclusive projects and off plan. So how are you positioning right now in a more cautious environment?
Yeah, just Lewis's point that, if you look at it from a, if this was an index, right, and it's a market where you see the movements in an equities market or a bonds market, you see these volatile spikes down and up, and then you have in many cases that pent up demand that opens up in quite a huge way once things are less uncertain. And that's something that we will see at some point. But of course, nobody likes to catch a falling knife, right? So whether it's 20 or 30 or 40%, people try to say, okay, I'm going to buy at the bottom, but where's the bottom? You will never know, and you probably won't hit that level unless you're lucky. It's not because you're smart. It's just because you got lucky. So let's say after things are normal, we get to a normalcy of a 20% discount. Today, there is, maybe a seller or two that will take 25 or 30% discount, right? And it is these times where you can take that kind of risk and then ride it out, right? And I think that's something we're seeing more and more of. Savvy investors are really pulling the trigger. In terms of off plan, of course, one of our businesses, Refine, is where we do a lot of our exclusives. What we did on literally day one of the conflict is we called the private developers that we're working with and we're handling projects of, and we said we need to be agile, and we created something that no other developer did, whereby we made a property purchase look like an option. An opportunity where you would pay 5% now, 5% in 6 months, 5% in a year, 5% in 18 months. That's 20% during the construction period, 50% on handover, and then 30% post. So that shows the developer's strength from a balance sheet perspective, and also ensures that the buyer, let's say they pay 5% today, and then 3 or 4 months down the line they're not comfortable. They paid for an option, right? They paid 5% for an option to, let's say they paid 20%, and then come hand over in 2.5 years time, and they don't think that the price is where they bought it. Then you paid 20%. You didn't really, your exposure is not that huge. So that helped a lot, and that's probably one of the very few projects that are. These are the projects where developers took our advice. Are the only projects that are really selling in the off-plan market, because if we look at the transaction, our business from a transactions perspective, we're probably overall at 30% of where it was, so we're 70% below. But then if you look at it just from an off-plan lens, it's probably 90% lower, more like 60% lower in secondary, so it averages to that. So off-plan certainly took a bigger hit, but we're from an exclusive perspective, we're very selective. We make sure that the terms of go-to-market are respected. Nobody's in la land here. And we're also fortunate to have a very strong pipeline ahead, including the Corinthia residences coming up, the Sofitel residences in downtown, which we believe will resonate well with serious buyers. They will come in also with very attractive payment plans and so on. People who are looking for a differentiated, high-quality product, even in a more measured environment, will look at opportunities like this. Even in the secondary, we're active in our communities where we have several exclusive projects and in the Canal District and City Walk and other areas. So these ready opportunities will come with incentives as well. So yeah, it's generally speaking, I think it is the time now for investors and users to start really, taking that purchase decision a lot more seriously and push forward with it. Banks are still lending, and they're very active. They remain active. The valuations are coming in at very healthy valuations, which is based on the data that we currently have. So we encourage people to take full advantage of that.
And is there more that the banks need to be doing or developers need to be doing?
I think the government developers, the EMARs and the Dubai Holdings of the world need to, pull the brakes a little bit for some time, just on the supply front. I think the next probably 24 to 36 months will be much more secondary oriented and secondary focused than off plan. That off plan craze. You'll have to live with a reality that this market will shrink significantly. And there is a role for the government to play in ensuring that humongous supply that was supposed to come or to be launched this year to basically shelve it for some time. And I think with the banks, certainly, and they're doing that. And I think there's a central bank push as well. They're encouraging lending. They're still pushing up to 80% LTV. Where we are today is a valuation conundrum where banks want to be conservative and disciplined when they lend. So when they say 80%, they want to make sure it's 80% of the real value today. The real value today is anyone's guess because of the disparity of data. And so when we go and we think that maybe there's a role of, for government, the central bank, the land department and DED to push on a higher LTV, 90%, but at the right valuation as well. So until we get to a point where that's a steady state kind of equilibrium intrinsic value of assets come into play, then I think the regulator will ease any restrictions on mortgages to push on that demand shock to encourage more and more transactions.
And anyone listening to this, perhaps for buyers listening to this, they're going to be saying to you, well, of course you guys are going to say that. You own brokerages. So how do you break it down for them? And this is, you did a very good job, Lewis, convincing me to buy in the episode that we did. I still didn't buy, but anyway, what would you be saying now?
Don't buy. If you don't want to buy, don't buy. That's you. That's how it is. Is life decisions. If you want to be a tenant for the next 20 years, that's your choice. The honest situation is you move the investment out of the equation. If I'm a simple-minded person, I want to know, do I want to pay the money that I make every month to my own mortgage, or do I want to pay a landlord? In 20 years' time, you can retire in a house that's yours that you don't owe any back money to. Forget making money. That's the essence of owning a home. And I say it to everybody, it's the feel. I go home to my home every day. And when I go home to it, it's mine. It's where my family live. It's my base. I've renovated it. It's not, if you move money out the equation, if Dubai's your home, buy a home, not your dream home. My first home wasn't my dream home. That's what real estate really is to me. It's a place that your family can come up. This should be a Dubai advert, by the way, for real estate. But that's what it is. That's what it is to me. Don't worry about investing. Just get off the rental ladder. Everyone should move to Dubai, settle in, buy a home, and then hopefully get a bigger home or wherever we're going to be later on. So if you don't want to do that, don't. You rent because someone will be a happy landlord. That's the honest situation with it.
I think what we've been saying to our brokers over the last few weeks is, you've got to push against an open door, right? If you speak to somebody and they're sheltering under a desk, scared, then they're probably not the person to even entertain a conversation about buying a home about, right? So forget about them. Just move on from them. But those people, when you ask the question, do you still believe at some point in home ownership in Dubai? And they say yes, because vast majority do. And the only next question is, well, what's the right price? Do you think 15, 20% off is a great deal? And many are. They think, yeah, that's good. Do you think it needs to be 30? Does it need to be 40? Well, if it needs to be 30 and I can get you 30 today rather than waiting a few months, let's go out and then try and find a deal. And I think that's the reality of it, right? There's a lot of people out there that if you have a good conversation with, uncover that they fundamentally want to own property. They fundamentally want to be a homeowner, investor, et cetera. Just challenge them on price because, this is a marketplace. And as Lewis says, it won't last forever. That window of opportunity will close at some point, and it is a market where you can get away with putting in some good offers, and you never know, you might just get a great deal.
We are putting our money where our mouth is. Today, probably either today or maximum tomorrow, you will have seen 62 transactions in Dubai Land Department, 32 of which are city walk units representing a full building, and 30 of which are a full building in Polo residences that we have just acquired. Those buildings, again, taking advantage of where the market is today, having conversations with the banks, with the various banks that lent to previous owners and so on. So this reflects really how we see the market. So these transactions are transactions where we have acquired on balance sheets these buildings, reflecting our full kind of long-term conviction on the market. So anyone with conviction, I think this is the time where we see value and you really take a position. So we're staying disciplined. When we're investing, we have our margin of safety always in place. When we see real value, real positioning, we position ourselves to take advantage of these opportunities rather than just reacting to what's happening in that moment.
I think a lot of people do that, by the way. I think that if you are a buyer, mimic what the leaders are doing. None of my properties for sale, not one. My off-plan properties that I've got, finishing the payment plans, that's Ras Al Khaimah, Nobu, Palm Jebel Ali, the W Man, whatever I've got going on, they're all completing. I'm not selling anything. Selling in this market now, if you don't need to, will get you the least amount of money. Some people need to sell. I use the example. I bought Bitcoin at 92,000. I put $2 million into Bitcoin 3 months ago. It dropped down to 61. It's now back up now to 78. No, it was 77, 78. It will come back. Like, I'm very chilled with it. And what I mean by that, Abdullah said at the start, ride it out. If you're buying a house or you're involved, there is it's not who times it right. It's who's in it for time. I'm in it for time. I will ride this market and it will just continue. So that goes back to the whole homeowner purchase. Buy a house, enjoy what you've got, and then ride the market. Do you know what happens, sir? Anybody that really has financial nous, and the actual number one man is Abdullah, that's from banking background. Inflation will do its bit anyway. If the Strait of Hormuz stays closed and inflation goes up, it means the iPhone price goes up, the cars go up. Do you know what else goes up? Houses. It's just what happens. So inflation will do its bit around the world anyway. So I just think everybody has to understand my Bitcoin theory. I'm in, I leave it, I ride it, and I will win in the long term.
Yeah, it only matters when you exit. So just
Correct.
Don't exit if it's not the right time. Okay, so we've given advice to buyers, we've given advice to tenants and sellers. What would we be telling landlords right now?
I mean, Lewis just put a nail on the head, right? If you don't need to sell today, today's not the right time to sell. And that's true. However, if you do need to sell, I always tell people to price ahead of the market. So if the market's going up and you're trying to price your property, a little bit ahead, stick a few dirhams on top of the last purchase. But at the same time, if you believe prices are going to continue to fall, the best thing for you to do is price ahead of that a little bit. Make sure yours is the best priced property on the market and get it gone quickly and move on with your life. That's the best advice I give.
0.5% below market value right now. You know why I do that? If you understand finance again, I could take all of that money out and put it into Weo Bank, into a company called Strategic Inc., which is a Bitcoin-backed fund. Pays 11.5% yield immediately.
This is not financial advice.
It's not. But if you sell 11% below market value, you give them that money for a year, I would give you back your asking price. That's real estate. That is all it is. If you understand what you're doing with money, like I took a hit on my London house. I bought for 1.5 million. I sold it for 1.31, a 13% loss. Why did I accept that money? Because I've got the money in capital. It's gone straight into Weo and I put it into 4 shares. I've made that money back already. Sometimes it's just about exiting the money and figuring out how you mitigate the loss. But a normal homeowner, honest with you, they don't know how to do that. I'm telling you, if you're watching this, put it into that strategic thing and get 11.5%.
And it's not financial advice. Disclaimer. Okay, crystal ball time. Crystal ball time. We're going to wrap up. Just a couple more questions. How do you see things playing out from here? What's your view on where the market goes next? What are you doing today to prepare for that? Like, help us look forward.
I think you have to stay disciplined in a market like this. You have to ensure that, what we were doing is planning. Of course, when you plan for a base case scenario, best case scenario, and a worst case scenario. But what we're prepared for is the worst case scenario, a smaller market, less transactions, slower time to deal. So what we're doing in several of our transactions is also pushing that narrative with and this is free advice here. We've been doing that and it's been working. We've been pushing our brokers to push buyers and sellers to accept a 5% deposit and a 5% penalty instead of 10%, and a longer lead time for transactions, while still protecting the agent's fee in full in case a party defaults. So what this creates for a buyer is optionality over a longer period of time, so 60 or 90 days in some cases. What that does for the seller is, if he agreed to sell at a lower price and he still believes he can sell for a higher price, and then someone comes in and outbids that 5% penalty, then he can cancel that and move forward with the other one. So that's been practiced. But then, we also have a longer lead time to transaction from let's say Form F signing to closing and transfer. But like I said earlier, there's definitely light at the end of that tunnel. We're seeing transactions close at high figures. Yes, the majority of transactions, as Rick alluded to, are low tickets. The average has come down, and these are the transactions where people are playing right now. But we just closed on a 3-bedroom in Bulgaria residences at 38 million, not far from where the asking was. So that bracket of the market still healthy. Definitely less depth from a liquidity perspective, but prices are holding up, which is a good sign. So that end of the market, people are still participating and pushing forward.
Great advice. Nice little tip there on the 5% deposit. Lewis?
It's business as usual for us to a degree. And what I mean by business as usual is the only thing I will be able to control is listing a property. If Silvia wants to sell a house, we'll take it. We'll give it the data points, what it sells for. We will take people to it and we will extract the offer. Our job at the moment in this market is not to, the reality is sellers have been very mean to real estate agents for 5 years. It's now the other way around. The buyers are now being mean to the sellers. So our job now is to extract the offer. We sold a house in Motor City yesterday, 1.35 million asking price, sold for 1.1. The broker said to me, Lewis, it's worth 1.3. And I said, well, the buyer's paid that. That's what it's worth today. So for us, it's business as usual. The honest truth, if you want my forecast for Dubai, if the skies stay clear, which they are, and I foresee that happening, and another political conversation to have, the tourism comes back, which it will. I know Issam Kazim and the guys at DET and Tourism are doing an incredible job. And I know for a fact Emirates and these companies have already got their marketing campaigns ready for Visit Dubai. Once them £100 flights enter that you can go to Dubai and you get free food and dinner, and then them hotels fill up, trust me, that's it. That is the gear that Dubai goes. We are so back, and that is not far away, guys.
And lastly, Rick.
In terms of crystal ball time, what I think is going to happen, I think we've all kind of touched on it throughout, right? I think we are going to go into a period where transactions are down from what we've all been used to. As Abdullah said, off plan will take a bit of a hit. I think the market has become and will become domestic led, certainly it's probably between now until after the summer, but that's okay. I think that's a good market to drive, and I think there's some value to be had in there. I think prices, as always, the price are dictated by buyers, not sellers. Asking prices are dictated by sellers. Sales prices are dictated by buyers. And I think at the moment where the sort of sweet spot of perhaps 15 in apartments, maybe up to 20% discount, we're starting to see a lot of activity. Could it go down further? In some areas, yes, where there's a lot of supply coming to the market. But likewise, it could go the other way very, very quickly. If we get a real sight to the end of the war, people got very, very short memories, and suddenly you get a couple of offers on the same thing, and that thing that sold with Lewis at 1.1 gets an offer at 1.2, and then counter offer at 1.25. Prices are back, right? So I do think transactions will be low for the next year and a half. Prices, as I say, are down to those sort of levels, but how long that lasts for really kind of depends on what happens geopolitically. But long term, mid to long term, I'm really genuinely very bullish about it.
And the UAE is historically known for moving quickly and decisively in times of uncertainty, bringing in new initiatives. Are there any government initiatives or policy changes you'd like to see or hope to see coming out of this?
Lewis, you've championed that with DLD, so you can take a crack at it.
Yeah, I think the three of us actually. Yeah, we seem to be hanging out a lot.
I know.
Actually, it's three, Abdullah and Rick.
What are you championing?
So yeah, we spoke to the head of Dubai Land Department. We have obviously between the companies, we've got incredible connections with the government at every level, and we hear everything from tourism to real estate to finance. And one of the things about 3 weeks ago we put together is a potential initiative for Dubai. I don't think it would get accepted because it's quite strong what we're asking for, but the perfect scenario is you get a 90% LTV. We've asked for a discount on the transfer fees from 4% to 2% for a 6-month period as a stimulus. Discounts on fees, but to be honest with you, the fees specifically, the government have already put in place for trade licenses a deferral for renewing. So, I mean, our trade license costs are disgusting. I think they're about 400,000 or 500,000 dirhams a year. Just to renew what we need with the government fees, and they've all been basically pulled down to single-digit figures or double-digit figures. So if we can get a stimulus, everything is about affordability. If Silvia, you were offered a chance to buy a house now, your dream house with no deposit at all, but it was your dream house, and you could afford the repayments, would you buy it? So with everyone else. So it's all about finding that affordability. It's a bit like a flight. If a flight was £20 and our family come and visit us from England to Dubai for £20, they're all getting on the flight. Everything in the world is affordable related.
Okay. And to wrap up, if you open the newspaper tomorrow or, any of your news websites tomorrow, what is the one headline you would like to see that would make you genuinely optimistic? And what would it need to say apart from the war is over?
Silvia back in Dubai.
I'll be back very soon. Just, I'm a bit of a pussycat. But no, genuinely, I've got PTSD from COVID times when I was locked out for 6 months. I needed to be in London for May, and I was not scared of a missile hitting me, or I wasn't scared in that sense. I was just fearful of airspace closure, which was a real possibility back in March. Not looking like it now, but
This bit's definitely getting edited out, right?
no, I'll keep it in.
Yeah, this is definitely.
It will save me some time. Lewis thought yesterday when I reached out to you, he thought that I was in Dubai and he was like, hold on, are we coming to the studio? And I'm like, no, we're doing this remotely. So yeah, I'll be back very soon, inshallah.
Other than, as Lewis said, what we've asked for in terms of stimulus from the DLD, I think the only thing, because everything else is there, right? Everything else is there. All we need is clarity and peace in the region. That's it.
I think what we didn't talk about is, that headline is peace in the Middle East. Everything falls into place. That scenario where there's lasting peace across all geographies within the region, then the scenario there where the capital that would come to the Middle East, the repricing that the Middle East will experience, and specifically, of course, places like Dubai will be a game changer. Right? There's reason Dubai has been paying 6.5% yields over the past few years is that perception of geopolitical risk. If that's gone, then you'll see Singapore-like pricing, where you'll expect yields at 2.5% and 3%, because that risk-free rate and cost of capital significantly changes. And what that means is asset prices will if rent prices Brent prices don't go up, then what's going to happen is you'll see repricing at the asset level, and you could see a scenario where prices will go up 1.5, 2x in order for these yields to compress to the norms of developed markets and mature markets. That scenario no one's talking about. Of course, that's the most optimistic scenario, but it is a scenario nonetheless.
So peace in the Middle East, war over, Silvia back. What more could we want? Okay, thank you very much, guys, for taking time out of your busy schedules to join me in this. And I'm going to be doing this very often. So whenever you're ready to come back and give us an update, please just jump back into the situation room. Wish you all the best. The next
Thanks, lads.
Cheers, guys.
Thank you.